Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
Hey there, Trega fans. Welcome back to our channel, where we dive into the world of finance and help you make informed investment decisions. Today, we're talking about Dominion Energy, a company that's outperforming the S&P 500 and catching investors' attention with its impressive earnings growth. Let's take a closer look at what's behind this stock's success. Dominion Energy, ticker symbol D, closed the most recent trading day at $60.33, up by 1.11% from the previous session, outpacing the S&P 500's gain of 0.59%. This is quite impressive, especially considering the utilities sector as a whole has been gaining 0.26% in the past month. But what's driving this growth? Looking ahead to Dominion Energy's upcoming earnings release, analysts are projecting $1.13 EPS and revenue of $4.05 billion, representing a 15.31% increase from the same quarter last year. And for the annual period, the Zacks consensus estimates anticipate earnings of $3.39 per share and a revenue of $15.24 billion. Now, let's talk about valuation. Dominion Energy currently has a forward P/E ratio of 17.59, which is slightly lower than its industry average. But what's interesting is that it trades at a PEG ratio of 1.29, which suggests the company's projected earnings growth is in line with its peer group. But what really sets Dominion Energy apart? Well, our research indicates that companies with strong earnings growth tend to outperform the market. In fact, empirical research shows that estimate revisions have a direct correlation with impending stock price performance. And at Trega, we believe that's a key factor to consider when making investment decisions. So, what does this mean for investors like you? Well, Dominion Energy currently has a Zacks rank of 3, which means it's holding steady in our industry rankings. But don't get too comfortable with a PEG ratio and forward P/E ratio that are relatively competitive. There's always room for improvement. Now, if you're looking for the latest stocks to watch, we've got just the thing. Our top pick is a satellite-based communications firm that's poised for major revenue growth in 2025. And if you want to get ahead of the curve with our elite picks, be sure to check out our free report on the 7 best stocks for the next 30 days. Thanks for tuning in to today's episode of Trega. If you've got any questions or comments, please don't hesitate to reach out. And as always, stay informed and make your money work for you.